Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. Listen, it's 3 o'clock. I'm doing it a little early. The market's not closed, so make sure you know when this is being filmed. We're at Lower Manhattan. We all have to get out of here before the bottleneck arrives. Anyway, with that said, I figured I'd do a little run through of what transpired today. And as of now, not much. Pretty much market opened up on a positive note. We were up 3, 4, 4.5 handles. And then within, I would say, the first hour or so, it was very slow. It was a very drippy type of trade. We just faded to the lows of the day. And then right around 12:30, little buy program protecting the pivot that we were building above, protecting that 1373, having a still dance around the 200-day moving average. At this point, it still remains to be seen what's going to transpire here. It doesn't quite feel like it did in June when we broke below the 200-day. They stopped out all the late sellers, and then it regrouped, and then we went in a new uptrend. But at this point, we don't really have to know yet. Right now, what I want you to do is still be flexible. I still see a lot of technical damage out there. I don't think you need to be in a rush to do anything. We still have a few days in front of us before the president meets with Congress and they try and come to some kind of terms on the fiscal cliff. And if you look here, I'm just going to scroll through some charts. You look here at the S&P, you will see, this was Friday's low. Right, Friday's low came in. We opened down, closed above the 200-day, and right now a very, very small range. The high so far, as of like 305, is 1384. Then you have the low, and it's really just in line here. If you look at the June area, which is right over here, this is where we made the low. The next day, we crossed above the high of that bottom day, which was just say 1282, closed relatively strong. And then this was the day that ignited us away from that area, that put some enthusiasm into the tape, and then we held higher, and then look what took place. So the question is, what's going to happen down here? That was the end of this move to the downside. So the 200-day then was a basic trap. So here we are, where you could have sold some here, you could have sold some when this trend broke, you could have sold on the day after election day when the floor broke around 1405. So now the question is, will this area hold? This is also the 50% Fibonacci retracement. So at this point, I am not making any big bets. I feel like I don't have to. Overall, we do have a little bit of a pivot area to trade against. So I do think in the next few sessions, maybe as we come closer to the day that they meet, if we get some clarity, we could get some type of move through this area, which we could put it on then. But then again, here's your big resistance. Big resistance comes in at 1391-ish, and then this high here on this day was what? This was 1401, and then you have the floor that was support that turns into resistance. So overall, a lot to prove here. Okay, you look at tech, not much to say there either. I talked about this descending channel ever since we broke this, the 50-day right here. And then we retested, and then the head and shoulders top, the left shoulder head right, boom, 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 all the way down. Trying to stabilize here. Trying is the key word. Maybe we go sideways for a few days, build a little bit of a floor, and then if we were to get going to the upside, we'd have to break this descending channel that way. That's the way the resolution needs to go. Or we're just going to continue in this methodical trend. So right now, we're still in correction mode. Nothing needs to be done so compelling to the upside. Look at Apple. We all went long on, or a lot of us did on what? On Friday. Little red dog reversal right here, okay? When we went below the 535.29, came back above, and look at today, just another rangy day. For me, I got out when it went negative or somewhere around there. You look at the 5-minute chart, it's unfortunate that there wasn't much commitment to it. Here is your gap up. All right, I know I always sell some into the gap up. I think I tweeted saying I have less than I came in here with. And then on this down move, I said, what, if it's not going to show commitment, I'm going to wait and see. I'm going to wait and see how it handles, 547, which it broke, and then wait how it handles 542, which it went below. And then you had a little bit of a trade here. If you look at this area, this was a nice little igniting bar right here. Okay, and then it held higher, showed some commitment to it. So there was a nice little trade for those who were at their desk through lunch. And then on this last flag, what did it do? Ignited to the downside, and now it's somewhat choppy. So overall, though, on the daily, this is what I'll be trading against. Okay, what kind of flag type pattern or lower consolidation do we have here? If you're trading it for a swing, make sure you're using this as your stop. You're using 533.72. If we do go a little bit more sideways, perhaps we could get involved on if it shows relative strength, and then if it trades above 554.50, we could get a little bit of a move to test the moving average of 563 and then maybe up to 574. Look where it came from. Okay, but so it is extended to the downside. It's well below all these moving averages, and it has a lot to prove. You go back to a little longer term chart, and it's coming into an area where it's trying here. This low is what? This is 528. Okay, not too far from it. A lot of people are talking about 528, but I think if we get to 528 and we can't bounce from this level, we're probably going lower than that. There's still a pretty big air pocket, if this level doesn't hold down. So we'll see. Right now it's below the 200-day and it's getting very comfortable below it. Google, real quickly, not much to say here after earnings. It was halted that day. That gave us some clues to get out of the way. Came into bigger support, little 2-day bounce. Red Dog reversal was Friday, a little continuation today. See how it handles 680. Amazon, nothing really much to talk about here. Still above the 200-day, trying to hold it. Well, a lot of things are below it, so I guess it's showing some type of relative strength, but still no need to rush out and buy it. I guess there's going to be a pivot right around here if the market wants to get back on track, so to speak. Here's your little triangle, and I would have to start really getting above like 233 to get going, but if it were to break this 200-day, I would be very careful owning Amazon. The PE here is very rich, and they've been supporting it and defending it. Let's make sure that continues for you to stay with it. Saw a little bit of a Red Dog reversal on Facebook today. This was earnings. Look at that gap up. Sold, little mid-level consolidation, pushed to the downside, and now, this was a trade for guys looking for it. I wasn't really looking for it. Some guys in the virtual trade floor caught it, went below 1913, so the low is 1987. The way you trade your Red Dog reversal, which all of you know, I say it till I'm blue in the face, is you would then buy it at 1913, put your stop in at today's low at 1887 if you want to do it as a swing. It was a good cash flow trade. Look at the size of this move. It actually engulfed this last day, showing some power here. So you can either take the trade or you hold it and see how it potentially could handle, these moving averages coming in right in the 20, 30, 20, 50 area. But overall, this showed some power. Nice Red Dog reversal all the way to the high here, near the highs. We'll see how it closes, but it's something to take notice in. Just had a huge move down. I would have loved to seen that in Apple. Remember when Apple did the Red Dog reversal? It didn't have that power. Look at that. It still closed in the middle of the range, $7 off the highs after a huge move to the downside. So, Facebook showing something, a bit different here. Nothing to write home about, but a trade, something to do as a professional trader if you have to. And if it gets above here, that's your next level. LinkedIn, some guys were talking about it also. So unfortunate, really unfortunate the way it gapped up on good earnings, sold. That's always a sign to get out of the way, and now it's been trickling lower. I can't say there's anything to really grasp here or anything to really hold on to except for, let's see if this does, what everyone's looking for the market to do, where, breaks the 200-day, gets everyone stopped out, then reclaims it. And if people waited, not to sell it when it broke this 118 or didn't sell before earnings or the day of, this was the last sell opportunity, so maybe it bounces back. So it's something to watch. Banks showing a little relative strength today. Goldman Sachs already at Friday's high. So if it takes out 117.85, your next level is probably about 120 to retest this broken trend line. So this is showing some relative strength. JP Morgan, it's hanging around. It's above the 100 and 200-day, testing this 40 support area, holding for now. Pretty big resistance area right here. If this were able to start getting above this 4150 area, maybe it would give us some signs that the market could, get back into gear a little bit. Goldman Sachs at this point is showing a little bit more relative strength. And I do think Bank of America still could be a nice long-term hold. You have this little trend line that's still holding. This is actually even above the 50-day. You don't see many stocks above the 50-day right now, and Bank of America is above it. So maybe money's hiding here. So as long as it stays above this trend line, I think you try and stay with it. And market gets in gear a little bit. Here's a small little lower triangle that it could get above, and that's 960. But again, in this market right now, though, adding on any strength has not worked. I know it hasn't worked for me, where I could be in a good position and it starts to go, I add to it, and then all of a sudden I ruin my prices and I give money back, and that's not a good feeling. So I'd still be very, very careful here. Most money is being made fading moves, selling rips and trying to buy dips. You've heard that little phrase, sell the rips, buy the dips. But lately, there's not that many rips. There's feeble bounces. So just keep that in mind. As far as gold, I wouldn't say failed, but you had to move off the 200-day, came into some bigger resistance. I drew this line this morning, so see how it handles maybe 166 if it could hold higher. As far as Caterpillar, I think had nothing really much to talk about except for it's still holding this trend line right here, acting. I can't say even acting better, just not pressured right now. IBM. Still, nothing really to be said. This was your earnings move. This is the strategy where if you gap down and don't fill it, it goes in that direction. Here's when it broke a key moving average, went below it, retested it, failed, and still just hanging around pretty lethargically. So overall, I would say you never really want to short. They say don't short a quiet market or a lethargic market, but it doesn't necessarily mean you need to buy it. If some kind of buy program or something comes out where you see something ignite, yes, then we'll get more involved. And as you can see from the virtual trade floor, really not that involved. Sperlin's not that involved. It looks like Laz, Rob, you name it. Guys are just doing less. Because when you're in an environment when you're not exactly sure, where we're oversold enough where it's hard to be short, where we just came in 50 handles from the Tuesday pre-election day at 1430 down to where we are at 1380. It's hard to be short here, but doesn't necessarily mean that it's going to hold. So with that said, just definitely honor your high-level stops and your low-level stops. And we've talked about that many times, meaning a sector stays strong, you have a high-level stop. If momentum leaves, you leave. If you test an area, like just say the S&P, remember we were talking about 1403, 1408, you go back to the spiders real quickly right around here. We weren't sure if this level was going to hold, and if you were trading against this level, right, trading against it, on this day, you should have left. Okay, you were trading against, remember I tweeted like 5 times in these days, trying to build a floor at 140.30 to 140.80. You know what? We broke that floor. That's your out. That is your lower level stop. And if you sold there, maybe you had a nice trade on Friday. I know I tweeted about buying some stuff in there. So anyway, that's your lower level stop. You want to talk about a high level stop. Here is somewhat of your high level stop, right? Here's when it broke the 50-day, broke this small little triangle. So, you don't know what it's going to lead to. So you might as well have a high level stop, after a big move, not knowing if they're going to get to everything, because that was pretty potent. So with that said, at this time, tactical. We'll get more data. We'll get more trading underneath our belt this week, and then we'll figure out whether or not the market shows commitment. So then, therefore, we will. It's not like the first quarter when we were holding 12, 15, 18 positions, hedged, high-fiving, playing breakouts, adding on strength, finding 52-week highs. No, not that environment. Same as way, August, September, we had a small environment like that, not as strong as the first quarter, but there was a nice trend there. As of right now, we're in a corrective phase, and guys are making money selling anything to the upside. That's not my strength, so I'm just trying to stay out of the way, pick spots. As a trader, you don't have to be on your high of the year with the market. You could be at the high of your year depending on where everything is, because you could be long, you could be short, you could be hands off. You get to pick the way you want to maneuver the market. Okay, some things you can control, some things you can't. This you can control, which is right here. This is your keyboard. Control it. Okay, don't complain about what you can't. Anyway, Scott Redler, T3 Live. I think it's probably around 3:25. Hopefully this is still relevant at 4 o'clock on the close. Have a great day. I'll see you in the morning.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.